In 2000, Blockbuster had the chance to acquire Netflix for $50 million. They declined the offer. 10 years later, Blockbuster filed for bankruptcy. Meanwhile, Netflix transformed into a $213 billion company. How did Netflix's innovative strategies contribute to the decline of Blockbuster's once dominant video rental empire? In the late 1990s, the home video rental market was dominated by Blockbuster. At its peak, Blockbuster generated $6 billion in annual revenue and operated over 9,000 locations worldwide. However, the company's rigid business model and mounting debt became significant liabilities. By 2004, Blockbuster was burdened with $1 billion in debt, with $200 million invested in an unprofitable online venture. This financial strain limited Blockbuster's ability to adapt to changing consumer preferences. During this same period, Netflix emerged as a disruptor in the industry. Founded in 1997, Netflix introduced a subscription model that allowed customers to rent DVDs by mail. By 2006, Netflix had surpassed 1 million subscribers. The company continued to innovate, setting its sights on online streaming by 2007. This strategic pivot positioned Netflix to capitalize on the growing demand for digital content. Blockbuster attempted to respond by launching its own online DVD rental service in 2004, reaching 2 million subscribers. Yet, the effort was insufficient to counter Netflix's aggressive expansion. Netflix's annual revenue in 2004 was $500 million, a figure that would grow exponentially as the company invested in streaming technology. By 2010, the landscape had shifted dramatically. Blockbuster filed for bankruptcy, marking the end of an era. Meanwhile, Netflix continued to expand its reach, with plans to spend $18 billion on content by 2018. The rise of streaming services fundamentally altered the entertainment industry, leaving traditional rental models behind. Blockbuster's inability to adapt to these changes sealed its fate, while Netflix's innovative approach propelled it to unprecedented success. In 2000, Netflix proposed selling itself to Blockbuster for $50 million. Blockbuster's refusal marked a pivotal moment. By 2006, Netflix had already gained a subscriber base of over 1 million. This period was crucial for Netflix as it began to explore online streaming, a move that would redefine the company's future. In 2007, Netflix intensified its focus on streaming technology. This strategic shift allowed Netflix to offer a seamless viewing experience, catering to a growing demand for instant online content. By 2008, Netflix had secured access to high-profile films through a deal with Starz, enhancing its streaming library. Netflix's pricing strategy also played a critical role in its rise. The introduction of an $8.99 streaming package made the service accessible to a broad audience. This competitive pricing, combined with a growing content library, attracted more subscribers and increased market share. The company's investment in streaming was complemented by strategic partnerships. In 2008, Netflix struck a significant deal with Epix, estimated at $900 million over 5 years. This agreement ensured a steady flow of popular films, giving Netflix an edge over competitors. By 2010, Netflix's aggressive expansion had paid off. The company reached a market valuation of $32.9 billion with 50 million subscribers. This growth was fueled by Netflix's ability to anticipate and adapt to technological advancements and consumer preferences. Blockbuster, on the other hand, struggled to compete. Despite launching on-demand services in 2008, the company could not match Netflix's momentum. Internal disagreements and a $1 billion debt burden further hindered Blockbuster's ability to innovate. In April 2011, Dish Network acquired Blockbuster's assets at auction for $228 million. However, attempts to transform Blockbuster into a Netflix rival were abandoned. By 2018, Blockbuster was reduced to a single location in America. Netflix's rise was marked by continuous innovation and strategic foresight. Its willingness to invest in streaming technology and content positioned the company as a leader in the entertainment industry. As Netflix expanded globally, its subscriber base reached 130 million worldwide by June. The decline of Blockbuster underscored the importance of adaptability in a rapidly evolving market. While Blockbuster clung to outdated models, Netflix embraced change, setting the stage for its dominance in the digital age. The transformation from a DVD rental service to a streaming giant exemplifies Netflix's strategic acumen and foresight. In the narrative of Netflix's ascent and Blockbuster's decline, a significant turning point emerged in 2004. Blockbuster, once a titan in the video rental industry, faced mounting challenges. Despite having over 9,000 locations worldwide, the company was burdened with $1 billion in debt. This financial strain was exacerbated by a $200 million investment into an unprofitable online business. As Netflix continued to innovate, Blockbuster struggled to adapt. In 2006, Netflix's subscriber base surpassed 1 million, while Blockbuster's online service managed to attract 2 million subscribers. However, Blockbuster's late entry into the online market and its inability to capitalize on the burgeoning streaming trend set the stage for its downfall. By 2007, Netflix had made a decisive shift towards online streaming, a move that would alter the trajectory of the entertainment industry. Blockbuster's response was sluggish. The company introduced on-demand services in 2008, but it was unable to compete with Netflix's rapidly expanding streaming library. Internal disagreements and strategic missteps further compounded Blockbuster's woes. The pivotal moment came in 2010 when Blockbuster filed for bankruptcy. The company's refusal to purchase Netflix a decade earlier for $50 million now loomed large as a missed opportunity. In contrast, Netflix's valuation soared to $32.9 billion, driven by a subscriber base of 50 million. The stark difference in outcomes highlighted the critical importance of foresight and adaptability in business. After Blockbuster's bankruptcy, Dish Network acquired its assets for $228 million in April 2011. Despite initial plans to revive the brand as a competitor to Netflix, these efforts were ultimately abandoned. By 2018, Blockbuster's presence had dwindled to a single store in America, a shadow of its former self. The turning point in this narrative was not a single event but a series of strategic decisions. Netflix's commitment to streaming technology and content investment contrasted sharply with Blockbuster's hesitation and financial missteps. This divergence set Netflix on a path to dominance, while Blockbuster's inability to adapt sealed its fate. As the digital age progressed, Netflix's foresight in embracing change became the cornerstone of its success. After Blockbuster's bankruptcy in 2010, the consequences of its strategic missteps became increasingly evident. Dish Network acquired Blockbuster's assets, including its name and logo, for $228 million in April 2011. Initial plans to transform Blockbuster into a Netflix competitor were soon abandoned, illustrating the challenges of reviving a brand that had fallen behind in the digital race. By 2018, Blockbuster's presence had shrunk dramatically. From over 9,000 locations worldwide, it was reduced to a single store in America. Meanwhile, Netflix had become a ubiquitous presence in American households, with more than half subscribing to its service. This shift underscored the rapid evolution of consumer preferences towards on-demand streaming. Netflix's strategic investments further cemented its position. In 2018, the company planned to spend $18 billion on content, a testament to its aggressive growth and commitment to delivering diverse programming. This financial muscle allowed Netflix to expand its library and attract a global audience, reaching 130 million subscribers worldwide by June of that year. Blockbuster's inability to adapt to the changing landscape was stark. In 2004, Blockbuster's annual revenue peaked at $6 billion. However, the rise of streaming services gradually eroded the traditional home video rental market. Customers increasingly preferred the convenience of digital access over physical rentals, a trend Blockbuster failed to capitalize on. Netflix's financial trajectory painted a contrasting picture. By 2004, its annual revenue had reached $500 million. Over the years, the company continued to innovate and expand its offerings, leading to a market valuation of $32.9 billion and 50 million subscribers by the previous year. The difference in financial outcomes highlighted the impact of strategic foresight and adaptability. The consequences of these divergent paths are clear. Netflix's rise to a $213 billion company exemplifies the power of embracing technological advancements and consumer trends. In contrast, Blockbuster's decline serves as a cautionary tale of the risks associated with failing to evolve. As the digital age continues to unfold, the lessons from this narrative remain relevant for businesses navigating the complexities of modern markets. The story of Netflix and Blockbuster offers a compelling lesson in the importance of adaptation in business. Blockbuster's decline was not simply due to Netflix's rise, but to its own failure to anticipate and respond to market changes. As streaming services emerged, customer preferences shifted dramatically. Consumers increasingly favored the convenience of digital access, a trend Blockbuster did not adequately address. Netflix, on the other hand, capitalized on these changes. By investing heavily in streaming technology and content, it positioned itself as a leader in the new digital landscape. In 2018, Netflix's planned investment of $18 billion in content demonstrated its commitment to growth and innovation. This strategic foresight allowed Netflix to expand its global subscriber base to 130 million by June of that year. Blockbuster's financial struggles further highlight the consequences of strategic missteps. Saddled with $1 billion in debt by 2004, the company was unable to pivot effectively. Its eventual bankruptcy in 2010 underscored the risks of failing to innovate. In contrast, Netflix's adaptability and strategic investments have solidified its market dominance. This narrative underscores a broader economic lesson. Businesses must remain agile and responsive to technological advancements and consumer trends. The ability to foresee and embrace change is crucial for long-term success in an ever-evolving marketplace. The rise of Netflix contributed significantly to the decline of Blockbuster. In 2000, Blockbuster's refusal to acquire Netflix for $50 million marked a pivotal moment. This decision, coupled with Blockbuster's mounting $1 billion debt, set the stage for its downfall. By 2010, Blockbuster filed for bankruptcy, while Netflix thrived by embracing streaming technology. Blockbuster's inability to adapt to the digital shift exemplified the dangers of stagnation in a rapidly changing market. Meanwhile, Netflix's foresight and innovation cemented its position as a global leader. This tale serves as a reminder: agility and adaptation are essential for survival in the business world. Adapt to thrive.